Students, my name is Anil. I am a professor in commerce and management. So, welcome to Anil Academy. Today I am going to discuss the subject accountancy for 11th standard. Before understanding the subject accounting, first we have to understand certain abbreviations which are used in the accounting. What are those abbreviations? So, first one is account. A bar C means account. So we are going to use the abbreviations because we are not writing account or accounting like that. We are not writing the alphabets here. We are going to write the what here abbreviations so that we can save the time. Next is the A bar CS accounts. Next third one is accounting. A bar CING is equal to accounting. DR means debit. CR means credit. GP means gross profit. GL means gross loss. P&L account means profit and loss account. B bar S means balance sheet. FA means fixed assets. LB means land and building. P bar M means plant and machinery. CF means carry forward. LF means ledger folio. JF means journal folio. So all these are the basic abbreviations we are going to use. So while passing the journal entry or posting to ledger account or preparation of the trial balance. So in all cases, so we are going to use the different abbreviations. So, so let us understand what is the accounting we have to understand. So what is accounting we have to understand. So accounting is an art of Accounting is an art of identifying, classifying, recording, summarizing, interpreting, the business transactions of business transactions of financial nature. So accounting is an art of identifying. Here identifying means first we have to identify the transactions. So goods sold for 20,000. That transactions we have to identify. Here identifying means passing the journal entry. Passing the journal entry. After passing the journal entry, we are going to classify the accounts. Classifying means preparation of ledger account. So preparation of various ledger account like this one rent account, salary account, office rent account, so then factory rent account, A's account, B's account, Bharat account, Amit's account, different purchase account, sales account. Like this different type of accounts we are going to prepare. That is called what here classifying. Next is the recording. Recording means we are going to record the transactions. Next is summarizing. Summarizing means preparation of the trial balance. So with the help of the ledger account, we are going to prepare the what here trial balance in order to find out the arithmetic accuracy. So if the trial balance is tally, so what the accountant did the accounts is correct, otherwise it is wrong. So next, with the help of the trial balance, we are going to interpret the business. So interpreting means preparation of the trading account, profit and loss account, and balance sheet. So trading account is the account prepared in order to find out whether the firm is earning the gross profit or incur the gross loss. Trading account is the account prepared in order to find out the gross profit or gross loss arising from the business. P&L account is an account prepared in order to find out the net profit or net loss arising from the business. So balance sheet means it is a statement showing the assets and liabilities. That is, it shows the financial position of the organizations. So that is that is what here. Accounting is an art of identifying. Identifying means passing the journal entry. Classifying means posting to ledger account. So recording means recording the transaction. Summarizing means so that is the preparation of the trial balance. So interpreting means finally at the end of the year we have to interpret whether the firm or business is in earn the profit or incur the loss. So how it is going to find out by preparing the this trading account, profit and loss account, and balance sheet. So interpreting the business transactions, we are going to record the business transaction of financial nature. Here financial nature means, so we are going to record the transactions like goods purchased 20,000. So sale of goods 1,000. Rent paid 5,000. So like this monetary terms we are going to record. So, but we are not recording the transactions like production manager performance is a very good or marvelous or fair. That is, we are not going to record. So, we are going to record the financial transactions only. So, this is the meaning of accounting. So, this definition is purely based upon the double entry system of accounting. This meaning is the meaning of accounting is purely based upon the double entry system of accounting. So there are two system of accounting, single entry system of accounting and double entry system of accounting. So before understanding the single entry system of accounting and double entry system of accounting, we have to understand certain terminologies which are used in accounting. First, you have to understand various terminologies which are going to used in accounting. What are those terminologies? Let us understand. So terminologies used in accounting. Used in accounting. Terminologies used in accounting. So we are going to use the various terminologies. So what are those? First we shall understand one by one. First one is the proprietor. So proprietor or owner. So proprietor. So he is a person who contribute the capital for his business. So very simple. So proprietor is also called owner. He is a person. He or she is a person who contribute a capital for the business. So they can contribute money or money's worth. So they can contribute money or money's worth. So money means here they are going to contribute the cash. So one of the proprietor Suresh is going to contribute 1 lakh rupees for his business. That is called money. And money's worth. Money's worth means so he can bring the capital in the form of what here? In the form of stock of goods. Stock of goods or plant and machinery, furniture he is going to bring. While starting the business, so they can bring the stock of the goods. For example, so this is a Rajesh is a proprietor who is going to start his own business. For that, there is a provision shop. He is going to do the grocery business. So for that, he is required the stock of goods. Provision items he is going to bring. So rice, tur dal, or oil, cereal items. So various cereal items he is going to bring for the his business. That is called stock of goods. Furniture, table, chairs. So various furniture he is going to bring. So that is called what here? So that is the money's worth. So proprietor is the person who contribute the money for his business. The proprietor is a person who contribute the capital for his business. So he is the owner. So he will bear all the losses. If the business earns more profit, he only enjoy that profit. Next, second one is a drawing. What is the drawing? We have to understand. Second one is drawing. So drawing means here, so proprietor withdraw the money or goods from his business for his personal use. So drawing means it means proprietor withdraw money or goods from business for his personal use. So what is that? A drawing. Drawing means here proprietor, owner is going to withdraw. Withdraw means here he is taking the money. To withdraw money, cash he will take. So or goods from the business for his personal use. For example, so Suresh Provision is running the grocery business. So for his home purpose, he is required. So one this rice, dal, cereal items are required for him. The rice, dal, or cereal items is required for his home. He will take 2,000 value of goods from his shop. He will take 2,000 value of the goods from his shop. So this is called what here? Drawing in the form of goods. Drawing in the form of goods. It is also called as a drawing only. Otherwise, another is what here? He can draw the money also. Suresh wants to pay the tuition fee of his son. So for that 10,000 is required. So what he will do? He will withdraw the 10,000 from his business. So from his shop, he will draw the money 10,000. So that is called what here? Drawing. Next is the what is the debtors? We have to understand. So drawing means what here? Proprietor withdraw the money or goods from his business for his personal use. So next is the meaning. So capital. So capital. Capital means money or money's worth contributed by the proprietor. So capital means what here? Money or money's worth, money's worth contributed by the owner or proprietor. So both are one and the same only. So proprietor is also called owner. So he will contribute either the money. So I already explained the examples. Suresh contributed 2 lakh rupees for his business. So apart from that, he will bring the money's worth. Money's worth means he will bring the stock of goods. He will bring the stock of goods. Furniture he will bring. Furniture or plant and machinery. So in this case, Suresh traders, so doing the business of grocery business he is doing. So what he will do? He will purchase a certain cereal items. That is called stock of goods. Furniture he will bring table, chair, so almirah, a refrigerator he is going to bring. So that is what here. That is a money's worth means here stock of goods, furniture, plant and machinery also. Suppose they are going to manufacture the product. They are converting the raw material into a semi-finished product or finished product. At that time also, so they require the plant and machineries. So all these are what here. So that is money's worth. So next is the what here. What is the meaning of debtors? We have to understand. So next is the debtors. The question of debtors arises when the goods are sold on credit basis. For example, ours is a XYZ company. Ours is a XYZ company. So sold a goods on credit basis. So for example, ours is a XYZ company. XYZ company sold a goods on credit basis. Sold goods on credit basis to various customer A, B, C, D. For A they sold a goods worth rupees 10,000. For B they sold a goods worth rupees 20,000. For C they sold a goods worth rupees 40,000. For D they sold a goods worth rupees 50,000. So in this case, so A, that is a XYZ company, sold a goods on credit basis to various customer A, B, C, D. So simple meaning of here debtors means the person who owes the money to the business. The person who owes the money to the business. The person who owes the money to the business. Here owes means he is in credit. He is in debt. So I will give one example, then I will explain you. That is, in other word, debtors means the person from whom our business, here business means you have to understood our business, the person from whom our business is required to collect the money. The person from whom we have to collect the money is called debtors. So, for example, in this case, XYZ company sold a goods to various customers A, B, C, D on credit basis, not on the cash basis. So, A is telling, I will make the payment after the 3 months. So, B is telling, I will make the payment after the 4 months. So, C is telling, I will make the payment after the 5 months. So, D is telling, I will make the payment after the 7 month. So, these people, A, B, C, D are there, no? They are sundry debtors. Sundry debtors. Sundry because varieties of the customers are there. Therefore, it is a sundry creditors. That is for XYZ company, A, B, C, D are the sundry debtors. So, sundry debtors means the person who owes the money, who is a debt to the business, who owes the money to the business. Business means our business. So, in other words, the person from whom we have to collect the money. The person from whom we have to collect the money is called debtors. So in this case, for XYZ company, the A, B, C, D are the sundry debtors. But this A, B, C, D are calling that. So XYZ companies for them creditors. So after understanding the debtors, so debtors means very simple, the person who owes the money to the business or the person from whom our business is required to collect the money. Next is the bad debt. So bad debt is a debt. Bad debt is a debt which cannot be recovered, which is not possible to recover. For example, so ours is a XYZ company. We sold a goods worth rupees 10,000 to Mr. A. Mr. A, we sold a goods worth rupees how much? 10,000. So he told I will make the payment after the 3 months. After completion of 3 months or 1 year or 2 year, he is not paying the amount. He went to abroad, he went to foreign country and settled there. Therefore, Mr. A is called what here? Mr. A is called bad debt. So debt which cannot be recovered. So another example, so ours is the XYZ company, sold a goods to ABC company. So ABC company worth rupees 25,000 value of goods we sold. But ABC company is become the insolvent. Insolvent means they are not able to pay the money. They are not able to pay the debt or loan. That is called what here? Insolvent. At that time also, this ABC company is become what here? Become the this bad debt. Bad debt is a debt which cannot be recovered. Bad debt is a loss for the company. Next, bad debts recovered. Bad debts recovered. So bad debts recovered means here, for example, in our cases, Mr. A purchased a goods worth rupees 10,000 and after 3 months he told he will go and make the payment. But he didn't pay it. He settled in the abroad. After the 4 years or after 10 years, he will come back and he will pay the 10,000. So that is called what here? Bad debts recovered. Understood? So that is what here bad debts recovered. So in this case, we sold a goods to whom here Mr. A for 10,000. He told after the 3 months he will make the payment, but he didn't pay 1 year or 2 years. At that time, we are considered the what here A as a bad debt. But after the 5 years or 10 years, he will come to India and he will pay the amount 10,000. So he is called what here bad. That is called bad debts recovered. Next is the doubtful debt. So doubtful debt means a debt amount may be collected or may not be collected. In this case, so ours is the XYZ company. Ours is the XYZ company. We sold a goods to A, B, C, D. So we are having the confidence that A and B will make the payment. But we are having the doubt. Mr. C and D may be pay the amount or may not pay the amount. So that is called what here? Doubtful debts. Now we have to understand what is the creditors. So all these are the terminologies first you have to understand because these are the basic foundation for the accounting. Let us understand the creditors. So here debtors, the question of debtors arises when the business, our company, when the company sell the goods on credit basis, at that time only the question of debtors arises. Next is the creditors. Creditors. The question of creditors arises when we purchase the goods on credit basis. When our company, our business is going to purchase the goods on credit basis, at that time creditors are arises. So creditors, the same meaning is very simple. The the person to whom our business owes, that is the person to whom our business is required to pay the money. The person to whom our business is required to pay the money, so that is called here creditors. That is what here, the person to whom our business our business is required to pay the money, required to pay the money, pay the money. Or the person to whom our business owes. So this is what here meaning. I will give one example, then you will understand what is the this creditors. Example, ours is a XYZ company. So purchase the goods from Tata. So 1 lakh worth rupees goods from Birla, 2 lakh worth rupees from Bajaj, 5 lakh worth rupees goods. That is, ours is a XYZ company. We are going to purchase the goods on credit basis from Tata company. So for Tata company, we are telling, so we are going to make the payment after the 3 months. For Birla, we are telling we are going to make the payment after the 2 months. For Bajaj company, we are telling we are going to make the payment after the 4 months. So all these people, Tata, Birla, Bajaj is there, no? So they are called as what here? Sundry creditors. Sundry creditors. Ours is a what here? XYZ company. So we are telling these people are the sundry creditors. We have to make the payment for them. The person to whom our business is owes. Understand? Our business is required to pay the money. The person to whom our business is required to pay the money is called what here? Creditors. Next is what is the meaning of solvent? Now understood, no? Creditor means what here? The person to whom our business is required to pay the money. The question of creditors arises when our company purchase the goods on credit basis. So in this case, what happened? Ours is a XYZ company. We purchase the goods on Tata, Birla, Bajaj on credit basis, not on the cash basis. All are on the credit purchases. We are telling the Tata company, I will make the payment after the 1 month. So for Birla, we are telling after the 2 months we are going to make the payment. For Bajaj, we are telling after the 4 months we are going to pay the amount. So these people are called what here? Sundry creditors. The question of creditors arises when we purchase the goods on credit basis. So next we have to understand the terms, that is a solvent. Solvent. So solvent means who is able to pay the loan. Solvent means who is able to pay the loan. For example, Mr. Amit took a loan from the bank. He took a loan from the bank, 50,000 rupees. So he is having the cash 2 lakh rupees in his hand. That means he is a what here? He is a solvent person. He can pay the loan. He can pay the debt. Debt means here loan. He can pay the loan or debt. So that person is called what here? Solvent. Who is insolvent? Who is not able to pay the loan amount? So for example, that is what here? Mr. Amit took a loan from the bank. So insolvent. Insolvent means who is not able to pay the debt. For example, in this example, Mr. Amit took a loan 5 lakh rupees from the bank, or he may purchase the raw material from the outsiders. So from the loan from the bank loan is how much? Bank loan is 5 lakh rupees, and also purchase the raw material from the outsiders on credit basis. So 1 lakh rupees. So total debt is how much? 6 lakh rupees. But he is having the cash in his hand is 2 lakh rupees. So in this case, we can tell, so Mr. Amit is an insolvent because he does not have the money to repay the loan amount. Now that is called insolvent. Insolvent means who is not able to pay the loan of the business. Next, we shall understand what is the expense. Expenses. Expenses means cost incurred in order to generate income. Expenses it means cost incurred in order to generate income. In order to generate income. So we are going to incur the cost. For example, so ours is XYZ company manufacturing the cloth. To manufacture the cloth, we are required the raw material, cotton is required. So here, normally in a manufacturing concern, they will convert the raw material into a semi-finished product or finished product. For example, so raw material is required. Raw material is converted in a manufacturing concern. Raw material is converted to a semi-finished goods. Semi-finished goods. Then they will convert the finished goods. For example, ours is a XYZ company, so manufacturing the cloth. In order to manufacture a cloth, cotton is the raw material. Cotton is the raw material. So they will convert the cotton into a thread, that is called semi-finished goods or partly finished goods. Then they will convert the thread into a cloth. So in order to convert the raw material into a semi-finished goods, that's the cotton into a thread, we have to appoint a laborers. We have to appoint a laborers. For them, we have to pay the wages. Wages. This is the one of the direct expenses. Expenses we are going to incur. After that, we have to maintain the books of account of all the workers. For that, we have to appoint the accountant. We have to appoint the accountant. For them, we have to pay salary. We have to pay the salary like rupees 5,000 or 50,000. So junior accountant or senior accountant we have to appoint. So we are going to convert the raw material into a finished, semi-finished goods or finished goods. For that we have to appoint a production manager. So production manager. For them we have to pay salary 1 lakh rupees per month. So like this, various expenses we are going to incur. And in order to convert the raw material into a semi-finished goods or finished goods, we require the plant and machinery. We have to purchase the plant and machineries. So all these are the what here is cost incurred. We are going to incur. So in order to generate a income, so we are going to generate a income means how that is after converting the cotton into a thread or cloth that we are going to sell in the market after converting the raw material into a finished goods. So after converting the cotton into after converting the cotton into a thread or cloth, we are going to sell that product in the market. So that is called we are getting the income. Sales here. Sales is a what here? Sales is a main income. So when we sell that product in the market, we are getting the income. So this is what here now understood. No, what is the expenses? Expenses means what here? So cost incurred in order to generate a income. So in a manufacturing concern, so we are going to incur the various cost. That is converting the raw material into a semi-finished product or finished goods. Here we are selling the either the thread we can sell or cloth we are selling. So that sales is there, no? That is a income or revenue for the business. Next, what is the loss we have to understand? If expenses, if expenses are more than the income, then we are getting the loss. More expenses but less income. So less sales but more expenses we are incurring. At that time, we are getting a loss. So more salary we paid to the production manager or accountant, everything we paid, but sales is a very less. At that time, what happened? We are getting the loss. That is what here. So another is what here profit. If income is more, if income is more than the expenses, that means expenses are less, but income is more. That is what here. So income is more than the expenses, we are getting the profit. So next is the what here we have to understand income. Income is totally different from the profit. So income means what we have to understand. Income is also called revenue. Revenue. So after converting the raw material into a finished goods, semi-finished goods or finished goods that we are selling in the market. So that is called what here? That is called income. Main income is what here? Sales is the main income or revenue for the business organizations. Next is the gain. Gain means indirect income. It is the indirect income. So for example, so ours is a XYZ company. We purchased the plant and machinery on 2020 for rupees 60,000. We purchased the plant and machinery in the 2020 for the 60,000. Same plant and machinery we are going to sell in the 2025. So we sold for the 70,000 rupees. So total how much? 10,000 rupees profit we earn. These are the gain, indirect income we are going to get from the business. Sometimes we paid a more tax. For that we are getting Suppose you are paying more tax. So income tax officer, what they will do? They will return the excess tax. That is called refund of tax. So refund of tax, and interest we earned in the bank. Suppose we kept money in the bank for FD or a saving bank account, we are earned money. That is called what here? That is interest earned from the bank, not directly from the business. Indirectly we earned. Next, we have to understand what is the assets we have to understand. So assets means resources of the business, whether it is visible or not. Assets means resource of the business. So here the simple meaning, assets means properties. Assets means properties. So organization has its own properties and liabilities. For example, suppose you are working in an organization, your salary is 2 lakh rupees per month. That means that much responsibility you are having. Like this, in an organization also, the organization is having the asset and also liability. So asset means resource of the business. That is the assets means what here? Properties. It refers to what here? Properties. So assets are broadly classified into different three categories. So first one is types of assets. Types of assets. So first one is the fixed assets. Second one is the current assets. Current assets. Third one is investment. Investment. So assets are broadly classified into three categories. First one is the fixed assets. Second one is the current assets, and third one is the investment. What is a fixed asset? So fixed asset is an asset which is used for long-term period, which is used for more than 5 years. So what are those? So it is land and building, plant and machinery, furniture, fans, computers, AC, air conditioner or air cooler, so computers or even printers, so they are going to use. So that is what here fixed asset is an asset which are used for long term period. Means long term period means more than the 5 years or more than the 5 years. So this fixed assets, that's the example I told, no, land and building, plant and machinery, furniture, fans and computers are the examples of the fixed assets. These fixed assets are further classified into two categories. So types of fixed assets. Types of fixed assets. So it is broadly classified into two categories. First one is the tangible assets. Tangible assets. Second one is intangible assets. So tangible asset is an asset which can be seen and touched. So we can see the land and building, plant and machinery, furniture, fan, computer which can be seen and touched. So what is the intangible asset? Intangible asset is an asset which cannot be seen and touched. For example, patent. So example, patent, trademark, trademarks, goodwill, Patent means finding the new innovation, new technology will be found out. For that, they will register under the Patent Act. For example, ours is XYZ company successful to find out a vaccine for the coronavirus. So what they will do? They will register their formula, and that formula they can handed over to others for particular years. Therefore, patent is a what here? Patent is a asset, fixed assets. It is used for long-term period. So they can manufacture the what here? Coronavirus vaccine. They can manufacture for the long-term period, and they can give their license for. Then they can transfer their license to one to the other organizations. So they can sell their this patent to other organizations or other company. So for example, Vivo mobiles are basically from the China. So what they did here, whatever they find out the Vivo 5G mobile they manufactured, that technology they sold to Indian company. So they sold to ABC company, that is an Indian company. So they can use that technology or formula for the 10 years, 10 years or 20 years, depending upon the agreement between the this Vivo company and ABC company of India. So for that, this ABC company is required to pay 100 crores or 1000 crore rupees to whom here? To the Vivo company, to the Vivo company, that is China. So China's particular company is manufacturing. For them, they have to pay 100 crores or 1000 crore rupees they have to pay. So that is the agreement between. So this normally not 1000 crore. It may be 100 crore rupees agreement for 10 years. So that is they can what year. So therefore, it patent is become a asset. Even trademark also certain companies are there, no? So they what they will do, they cannot have the branches in all over the world or different part, they does not have the branches. What they will do, they will sell their, they will give the license of their trademarks to other company, and they manufacture the product and they only sell the product, but they have to pay certain fees. Even Vivo company is similar like that. So for Vivo, in the name of Vivo company, so what here Indian this ABC company is going to manufacture the this mobile and they will sell, but they got a license from them. Goodwill means a reputation is also become the fixed assets. So that is also making the valuation in the market. So these are the what here intangible assets. So next we shall understand what is the current assets. So current asset, what is the current asset? We have to understand. Second one is current asset. Current asset is an asset which can be converted into cash within the 1 year. Very simple. Current asset is an asset which can be converted into cash within the 1 year. So what are those? So first one is an example. So cash in hand, cash at bank. So closing stock, prepaid expenses, prepaid expenses, sundry debtors, sundry debtors. So all these are the various examples of current asset. Current asset is an asset which can be converted into cash within the 1 year. So cash in hand converted, cash at bank we can convert. If you can go to the bank, you can draw the money. Closing stock, this year's closing stock become next year's opening stock, and we can sell that product. That is closing stock. Prepaid expenses. Suppose you paid a rent in earlier to your landlord, you can get back that money. And sundry debtors, you sold a goods on credit basis to your various customers. From the customers you can collect the money. So that is called what here? This is a current assets. So current assets are very simple. Then next is the investment. Current asset is asset which can be converted into cash within 1 year. Next third one is the investment. So what is investment? So please don't get confusion. Investment means here purchasing the shares and debentures of other company. Purchase the shares or debentures of other company. So normally people are getting the what confusion that investment means we are going to invest the capital for our business. So if the proprietor contribute the money for his business, that is called capital. If the company purchase the shares and debentures of other company, that is called investment. For example, ours is the XYZ company. Ours is a XYZ company. We are going to purchase the shares of Tata company. So Tata company shares and debentures we are going to purchase. So debenture nothing but bonds. So debenture is also called bonds. So we purchase the shares of this what here Tata company. So what rupees maybe on 100 shares we purchased. Value of one share is 1000 rupees. 1000 into 100 means 1 lakh worth rupees of the shares we purchased. So Tata company is paying the dividend for that. So 300 rupees per share they are going to pay. So that is 100 into 300 means nearly so, so 30,000 rupees. So dividend they are going to get. If they purchase the debentures, that Tata company will pay the interest. So that is what here. So that's investment means purchasing the shares and debentures of the other company. If you purchase the shares of Tata company, so they will pay the dividend. If you purchase the debentures of Tata company, they will pay the interest. So these are the what here investment. That is a different type of the assets. So next, what is the liabilities we have to understand. So far we understand the what is assets. Let us understand what is the liabilities. So what is the liabilities? So liabilities means here responsibilities of the business. So I already told now when asset is there, then the liabilities will be there, responsibilities will be there. So there are various liabilities are there. Suppose one person started is a sole trading concern. So there are three types of the business organizations. So first you have to understand that. First one is the sole trading concern. Sole trading concern. Second one is partnership form. Third one is joint stock company. So proprietary, this one is a proprietor form of business. Proprietor form of business. Sole trading concern, or it is also called proprietorship form of business organization. Here what the sole trader will do, so he will do the trading activities. So purchasing the this grocery for less price and selling at higher price, or he can do the stationery business, purchase the stationery for less price and selling at a higher price. So for that he may require hardly one uh, 2 to 5 lakh rupees capital is required. So that amount he can get from his friend or relatives or from the bank. So, but this is what here, this liability. First is capital we are going to. Before that, we shall understand this. So, partnership firm. Partnership firm means two or more individuals going to start the business. Two or more partners contribute the business and so doing the business. So that is, for example, ABC. So ABC are different partners who contribute the capital 10,000, 10,000 each. They will contribute the capital and doing the business and share the profit. So everybody is contribute the profit 10,000, 10,000. So they will share their profit or loss in equal ratio. In an equal ratio, they are going to distribute. And they are having their own partnership deed, partnership agreement will be there. And third one is the joint stock company. So joint stock company is a company registered under the Companies Act 1956 or 2013. So joint stock company is a company registered under the Companies Act 1956 or 2013. Here we have to follow the strict rules and regulations we have to follow. But in case of the sole trading concern, license is enough for them. So license they can get and start. In case of the partnership firm, partnership deed is required. In case of the joint stock company, so we have to follow the strict rules and regulations which are mentioned by the Companies Act 1956. So that is what here. So capital. Now let us understand capital. First you have to understand this a different type of the business. So that you will get idea what is the firm, partnership firm, what is the joint stock company, what is the sole trading concern. It's also called proprietary form of organization. So sole trading concern means only one person running the business. So he only bear all the losses, he only earn, he will enjoy the entire profit. Whatever the risk arises, he only bear. In partnership form, the different partners will share their losses or income. In joint stock company, so different members will come, different shareholders will contribute the capital. So capital, first is the liabilities is the capital. So in case of the sole trading concern, so he will contribute so very less amount of capital, maybe 5 to 10 lakh rupees he can contribute. But in joint stock company, they require crores amount. At least they have to contribute 2 to 5 crore rupees they have to contribute while doing the business. Therefore, company what they will do, they will issue the share capital. They will issue the share capital. So this capital is for classified into different categories. So types of capital. Types of capital. So first one is the share capital. Share capital. Second one is debenture capital. Debenture capital. It is also called debt capital. Debt capital or loan capital or bonds. It's also called bonds. Bonds. So we shall understand what is the so share capital is one type of capital issued by the company. So capital we can collect in a various form. We can take the loan from the bank or we can issue the share capital. When they issue the share capital, it is the responsibility of the company to pay the dividend. So for example, so ours is a XYZ company. Ours is a XYZ company. we are giving advertisement in the newspaper. So those who purchase one share, the value of one share is how much? So value of one share is 1000 rupees. Those who purchase the, so one share, its price is rupees 1000, they will get the dividend. They will get the dividend. So 300 rupees dividend they will get. They will get the 300 rupees dividend. So that is what here. So different people will come and purchase the shares of our company. A, B, C, D, E. Different people. Amit, Bharat, Chandrasekhar, Dinesh, Emmanuel. So different people. So Francis, Emmanuel, Francis, different people purchase the shares. So all these people are called what here? Shareholders. They are called shareholders. Those who purchase the shares of our company is called shareholders. Suppose A don't want to continue his capital. He contributed a capital for 1 year. After that 1 year or 2 years, he want to get back their capital. At that time, it is the responsibility of XYZ company to repay his capital. So that is what I am telling to you. Capital is one of the responsibility. If any shareholders wants his money, it is a responsibility of company, our company, to repay the amount. So not only giving the principal amount, and also they have to pay the dividends. They have to pay the dividends. So that is a one type of capital. That is share capital is a one type of capital. Another is that debenture capital. So it is also called debt capital, loan capital. It's also called bonds. You heard about the ICICI bond, IDBI bonds. So that is nothing but a debentures only. In case of the debentures, company is paying the interest. They are paying the interest. So they are giving advertisement in the newspaper. That is those who purchase the 1000 value of one debenture. Those who purchase the 1000 value of one debenture, they will get the interest. They will get the what here? They will get the interest. So 15% interest they are going to get per annum, per year. Per annum means per annum they are paying interest. So for example, one of the person purchased the debenture. So 100 debenture he purchased. So 100 into, so these are the 100 debentures into 1000. Value of one debenture is 1000. So totally how much it becomes? 1 lakh. He contributed a money. So Mr. M contributed a money. So purchase the 100 debentures. He purchased how much debenture? 100 debentures. So value of one debenture is 1000. Total money he contributed how much? 1 lakh. At the end of the year, how much interest will get by Mr. Yam? So Yam will get 1 lakh into 15 percentage. So percentage means 0, cancel. Totally, he will get the 1000, 15,000. So interest he will get here. Yes, 15 ones are 15. That's a 15,000 interest he will get per annum. So that is called what here? Debenture. Debenture is a one type of capital issued by the company. In case of debenture, company is paying the interest. In case of the share, company is paying the dividend. So that is the main difference between the share capital and debenture capital. This share capital is further classified into two categories: equity shares, and preference shares, So these are the liabilities. One of the liabilities what here? Capital. So capital in case of the company, how it is explained. But capital in case of sole trading concern, they're having only less amount, like 5 lakh rupees to 10 lakh rupees. They are having the what here? Capital. So another liability is current liability. Next, second is the current liability. So far we studied the capital. So far we studied the capital. Now we shall understand what is the liabilities. So first capital is understood. Second one is the current liabilities. Current liabilities. CL. We are using the abbreviation current liabilities here. Current liability is a liability which is required to repay within 1 year. So by using the current assets, current liability is a liability which is required to repay within 1 year by using the current assets. What are the current assets? Cash in hand, cash at bank, closing stock, prepaid expenses, sundry debtors. All these items they can use and discharge the liabilities of this one. That is the current liabilities. What are the current liabilities? Sundry creditors, sundry creditors. I already explained the question of sundry creditors arises when our business purchase the goods on credit basis. So we have to pay. That is our liability. Understood? So next is the income tax payable. Income tax payable. We have to pay income tax. That is also our responsibility. So simply earning a profit is, if our profit is more, so we have to pay the tax on the profit. Next, overdraft. Overdraft. Sorry, bank overdraft. So, so in a current account, normally in bank there are different types of accounts are there. Saving bank account, RD account, recurring deposit account, and current account. Current account is meant for businessmen only. In current account, the businessman having the facility to draw more amount than actual balance available in his account. So even though he is having the less balance, he can draw more amount. For example, so Mr. Ashok is having the bank balance, bank balance in current account is rupees 50,000. So he is drawn 80,000 rupees. He drawn how much here? 80,000. How much is the overdrawn here? How much is overdrawn? 30,000 is overdrawn here. That is drawing more amount than the actual is called what here? Overdraft. So this 30,000 rupees is required to pay to whom here? To the bank. Is required to pay the to whom here? Required to payable to the bank, because this facility is given especially for the businessman. Apart from the paying the bank overdraft, he is also required to pay interest on bank overdraft. So interest on bank overdraft. Interest on bank OD. OD means overdraft. So all these are the current liabilities. One more is the outstanding expenses. So what is the outstanding expenses? Expenses incurred but not yet paid. For example, so April month salary not yet paid, or April month rent not yet paid. April month rent we have to pay 10,000. That is called our example outstanding rent. Outstanding rent. OS means here outstanding. So rent they have to pay for the month of April. So April month and May month rent they didn't pay it. So that is called what here outstanding. So that is a 20,000 rupees. The rent is pending. That is called outstanding rent. So another is the outstanding salary. Outstanding salary. We have to pay the salary to the Mr. X rupees 25,000 for the month of April and May. Totally 50,000 they have to pay. That is called what here? Outstanding salary. That is expenses incurred but not yet paid. And these expenses they have to discharge within the 1 year. Therefore, current liability is a liability which is required to repay within the 1 year by using the current assets. That is by using the cash in hand, cash at bank, closing stock, prepaid expenses, sundry debtors. All this money they can use for discharging the sundry creditors. Sundry creditors means what here? Who supply the raw material on credit basis. Supplier who supply the goods or raw material on credit basis, we have to pay that. We purchase the goods on credit basis. So for them on credit basis, we have to make the payment. That is called sundry creditors. It's our responsibility to pay the money to whom here? Sundry creditors. Then income tax we have to pay to the income tax department. Even we have to pay the GST also. So bank overdraft drawing more amount than the actual balance available. So interest on bank overdraft. Apart from paying the bank overdraft money amount, you have to pay interest on bank overdraft. Outstanding expenses I already told. Expenses incurred but not yet paid. So salary outstanding. We have to pay the salary for the month of April, May. Still we are not paid. That is called outstanding salary. Rent we have to pay for the month of April, May. So still we are not paid. We have to pay that. So this is the what here. All are the current liability. Current liability is a liability which is required to repay within the 1 year. So by using the current assets, that is cash in hand, cash at bank, closing stock and prepaid expenses. So another liability is a short-term loan. Short-term loans. Third one is short-term loan. So there are three types of the periods are here. First I will give the idea of three types of period. So types of period. Types of period. Short-term period. Short-term period. Medium term period. Medium term period. So long term period. Short term period means it is a period for 1 year or less than the 1 year. That is called short term period. Medium term period means it's a period for more than 1 year but not more than 5 years. That is less than the 5 years. More than 1 year but less than the 5 years. Long term period means 5 years or more. So that is called what here? So it is a period for 5 years or more than the 5 years. Understood? The short term period means what here? It is a period for 1 year or less than the 1 year. Medium term means what here? So more than 1 year, but not more than the what year? 5 years. That is less than the 5 years. It should be less than the 5 years. So long term means what year? More than the 5 years. So this is the basic concept you have to understand so that you can understand what is the short term loan. Now we shall understand what is the short term loan. Short term loan is a loan taken by the proprietor So he is required to repay that loan within the 1 year. Short-term loan is a loan which is required to repay within the 1 year. That is called short-term loan. So what is the long-term loan? Another is the long-term loan. Long-term loan. So long-term loan means a loan which is required to repay 5 years or more than the 5 years, that agreement made between bank and borrower. So long-term loan is a loan which is required to repay. So 5 years or more than the 5 years, that agreement made between the borrowers. Borrower means the person who took the loan and the banker. So that's the agreement between the bank and borrowers. So borrowers. Suppose a bank is given a 7 years to repay that loan, so they can repay that loan within the 7 years only. Suppose they give time for 10 years, within the 10 years they can pay. That is what here. So 5 years or more than 5 years they are required to repay. That is called long-term loan. So, but in short-term loan they are required to repay within the 1 year. So that is also another liabilities. And another is what here, dividend payable. Dividend payable. Payable. So after issuing the share capital to the public, so we are collecting the money from the shareholders. After collecting the money from the shareholders, we have to pay the dividend per annum. Per year, we have to pay the dividend. So that is also another responsibility, liabilities. That is the what here various liabilities I explained so far. What are the various liabilities I explained? So first one is the capital. Capital may be what here, share capital or debenture capital. A share capital is further classified into equity share capital, preference share capital. So debenture capital means what here? A loan capital or debt capital issued by the company. It's also called bond. So next another is what here is current liability. I already explained current liability is a liability which is required to repay within the 1 year. Short-term loan is a loan which is required to repay within the 1 year. Long-term loan is a loan which is required to repay, so 5 years or more than the 5 years, that agreement made between whom here, bank and borrowers. And another is the dividend payable. Dividend we have to pay. Simply issuing the share capital and collecting the money from the this shareholders is not enough. You have to pay the this dividend, and also interest payable. Interest payable. Suppose you are issuing debenture capital, you have to pay the what here? You have to pay the interest for them. So these are the various responsibilities of the business. Understood? So whatever I told now, this share capital, equity share capital, preference share capital, that is applicable for the joint stock company, not for the sole trading concern. So sole trading concern or partnership firm are not issuing the shares. Only the joint stock company is going to issue the shares. Now let us understand a simple word. What is the purchasers? Purchase means buying the goods. Purchase the goods. Goods may be purchased either on the cash basis or credit basis. Goods may be purchased either on the cash basis or credit basis. Suppose we purchase the goods on credit basis. Suppose our companies purchase the goods on credit basis. We have to maintain purchase book. We have to maintain purchase book. So purchase book is meant for recording the transactions of credit purchases. So if our company purchase the goods on credit basis, we have to record the transactions in the purchase book. Purchase book is meant for recording the credit purchases, not cash transactions. So cash, suppose we purchase the goods on cash basis, so that transactions we are recording in the cash book. That transaction we are recording in the cash book. We purchase the goods on credit basis, that will be recorded in the purchase book. Next is the sales. Sales. So after converting the raw material into a finished goods, so we are going to selling the sale of goods. So in our example, we are converting the cotton into a thread or cloth. Thread or cloth we are going to sell. That is a sale of goods. Goods may be sold for either on the cash basis or credit basis. Goods may be sold for cash basis or credit basis. If our company sold goods on credit basis, we have to record that transaction in the sales book. We have to record that transaction in the sales book. Next is what is the purchase return? Purchase return. So purchase return. For example, we purchase a certain goods. So ours is a XYZ company. So we purchase the goods from Birla. So Birla company supplies certain raw material. They supply a raw material to our company XYZ company. So after purchasing the goods, so our company analyze that certain defects or damages are there. Certain defects or damages are there in the goods. Certain defects or damages are there in the goods. That goods we can return to whom here? To the Birla company, the supplier. We can return to supplier. That is called purchase return. For purchase return, we have to maintain debit note. Whatever we return the goods, that will be recorded in the debit note. So our company is required, our XYZ company is required to maintain debit note. Next, what is the sales return? Sales return. So ours is XYZ company. We sold a goods to different customer. After selling the goods to various customer, if the customers find out any defect or damages, they can return that goods. That is called what here? Is sales return. It is also called return inward. Return out inward. This is called return outward. Return outward. So return outward in the purchase return, it is because so we are going to return that goods. When the goods is returned, goods is going to outside. That is return outward. So sales return. We are going to sell the goods. So ours is XYZ company. We sold a goods to different customer A, B, different customer we sold. So one of the customer A find out, so we sold for 50,000 value of goods we sold to A. But Mr. A find out certain defects or damages are there. Certain defect or damages are there in his goods. Now Mr. A will return the goods to our company, XYZ company. That is, because of defect and damages, customer return the goods to our company. That is called what here? Sales return. It is also called return inward. Sorry, return inward. Return inward. So that means goods will come in our organizations. So now customer A will return the goods to our organization XYZ company. That is, goods is come inside. Therefore, return inward. So now we shall understand what is the stock. Okay. stock. So stock may be what, either the opening stock or it may be closing stock. First, the stock are broadly classified into two categories. So types of stock, types of stock. So first one is closing stock, closing stock. Second one is opening stock, opening stock. What is the closing stock? First we have to understand. First we shall understand closing stock, then we will understand what is the opening stock. Closing stock means here after selling the goods, for example in the 2024, so we manufactured the goods. We manufactured so nearly 2 lakh worth rupees goods we manufactured in the 2024. In 2024 we manufactured to nearly manufactured goods so rupees 2 lakh. In that we sold plus sales sold goods sold is 1,50,000. Remaining 50,000 is called closing stock. Is called closing stock. That is after selling the goods. If any goods are left in the warehouse or godown, that is called what here? Closing stock. After selling the goods, first they will manufacture. So how much goods in this example? 2 lakh worth of goods manufactured and sold is 1,50,000. And remaining is what here? 50,000. That is called closing stock. That is after selling the goods. So if any goods are left in the godown or warehouse, that is called closing stock. This is on the closing stock on 31st December 2024. What is the opening stock? So last year closing stock will become the opening stock. So on 2025, the same value of 50,000 will become the opening stock for the year 2025. As last year's closing stock will become this year's opening stock. In this case, the closing stock on 31st December 2024 is 50,000. That will become the opening stock for the opening stock will become how much here? Rupees 50,000 for the year 2025. So these are the various terminologies we have to study before going to study the accountancy. That is studying the passing the journal entry or posting to ledger account or preparation of the trial balance or preparation of the trading and profit and loss account and balance sheet. So I kindly request all the students subscribe my channel so that I can introduce the new videos. In the next video, I will explain the single entry system of accounting and double entry system of accounting. So please share this video to your friends, but don't forget to subscribe it. So if you subscribe my channel, I will introduce the new videos in the accountancy and other subjects also. So thank you for watching my video. Thank you one and all.